which is what investors seek in the age of AI and deep tech. And that session will be moderated and chaired by Mr. Deepak Daftari, chairperson of our IT Entrepreneurs and Tech Startup National Committee and director and CEO of DD Web Vision Private Limited. We have with us Mr. Anil Joshi, managing partner, Unicorn India Ventures. Mr. Anirudh Damani, managing partner, Artha Venture Fund. Mr. Manoj Kumar Agarwal, co-founder and managing partner, C Fund. Dr. Anju Gupta, partner, Ivy Cap Ventures. And Mr. Agastya Kumar, investment manager, We Founder Circle. Can we all take stage, please? I am repeating myself. People outside, if you can hear me, kindly get inside. I request the hotel to help usher people in, my colleagues to help usher people in. We have to start the session. The speakers have already taken stage. It's out of respect that we can come in and fill the hall. I understand that some of you are having lunch. You can come to the hall with your lunch plates also, not a problem. But please come inside.
There's a star. आइए प्लेन आपके बिना नहीं उड़ेगा.
No, Mr. Damani is probably going to sue us, mentioning that we have invited him, but we are not letting him eat anything.
Good afternoon once again. Apologies for the delay. It was beyond our control. Apologies for the delayed lunch again. Some things are beyond our control, so thank you for bearing with us. We'll start one of the most exciting sessions we've been doing every year. Hearing from the people who have the purses.
I just interrupt once? I want to place it on record. It's his benevolence that he has apologized for late lunch. However, the lunch was not late. As per schedule, it was on 1:50 and we started the lunch at 2 o'clock. So I just wanted to place it on record. The lunch was almost on time.
Still our apologies for whatever mistakes we made. I'm sure you all are gracious enough to overlook that. So this has been the highlight of every session, every program we have done since this is the 4th year, and people actually want to hear from the guys who control the purses. We think as people who are aspiring to start that funding is very important. We are going to have both sides of the ship, that whether really you need funding or can you still survive and wait for it, and if you get funding, what's expected out of you once you get the money. So for those of you who are thinking that that's the start of your success, I'm sure after listening to all the distinguished people on the panel, you will understand the kind of responsibility which comes with getting money from them, because that's equally important. As they say that out of every 10 startups, 9 are bound to fail, and their risk appetite in you is that much more, because they are also managing money for others, and just the way you are answerable to them, they are also answerable to their LPs. So it's more than your pain point. Their success is also equally important, because they also have performance matrix to answer to their LPs. So without taking more time, we'll keep it interactive, although we'll cut it short a bit by 10 minutes for people, because a lot of people have their flights. We'll start with a minute from each of you. Introduce yourself, your fund size, and the fund philosophy. What kind of companies you are typically looking at, so that you are not mobbed by everybody. Everybody has their own flavor of investment. Some have deep tech, some have consumer, some have e-commerce, some have space. So just in a minute, if you can sum up what's your investment theory, what kind of startups you are looking at, and what is it that you typically look at in terms of ticket size. And we'll start with Anirudh.
Hi. First of all, always difficult to go after a lunch session, right? So I hope to keep you guys all awake. I am part of a family office, Artha India Holdings. I run the alternative investment side of it. So we invest in early stage startups. Part of that practice is also running we run about 6 funds today. Total AUM close to around 3,000 crores at the moment. What we'll talk about today, because this is obviously a startup summit, is that we have a venture fund, which is now in its second edition. So we've raised about 500 odd crores for it. We invest in early stage companies that are at what you call revenue stage, right? So usually about 10 to 15 lakhs a month in revenue. If you're really deep tech, then we're okay without revenue, but we want some commitments from future customers to be in place. We invest in what we call the 1-2-4 model, which we invest about 4 crores at seed. We double down with 8 crores at pre-series A and double down again at 16 crores at series A. So intent is we're a long-term investor and we'll be with you all through the journey from seed to series D through our separate funds. Currently what we're concentrating on, to be quick, is that we're looking at premium consumer as being a strong thesis for us. We're looking at fintech infrastructure. We're looking at deep tech with a focus on space tech. We've done a lot of space tech. And we're also looking at applied AI solutions, which is the application layers being built on these LLMs and SLMs. So that's been our focus for Fund 2. We've done roughly about 10 investments from Fund 2 already, and we'll be at about 16 investments by the end of the year.
Thank you, Anirudh. We'll come over to Manoj Bhai.
Thanks, Deepak. Pleasure to be here again, fourth time. So I run C Fund. We are an early stage tech-focused fund. We are investing from our second fund. About 250 crore is the fund size. We've already done about 13 deals from this fund, and we invest into 14 companies from Fund 1. So what we look at is, largely frontier tech, what we also call deep tech, across semiconductor, space, quantum, vertical AI, focused on enterprise, solving specialized problems for the enterprises. Then mobility solutions, look forward to, interacting with some of you.
Thank you, Manoj Bhai. Agastya.
Yeah. So I'm Agastya. I lead Bangalore and South India operations of WeFounder Circle. So WeFounder Circle is essentially a parent entity to private investments, having all the facets there is to private investing. So we have our accelerator program, we have our VC arm, we have our own, we started as an angel investment platform. So we are entirely network oriented, and that's why I'm here, because events and brushing shoulders with all the stakeholders, that's the sole thing that we leverage on and capitalize on, right? And we are sector agnostic. We start right from the first check in our EvolveX accelerator program. We take in our cohort, we graduate them, and then they join our angel platform, both global and as well as India, regional. And yeah, of course, we 2 years back we formulated our Fund 1 in Lavanya. That is set up in Surat. Till date, we have deployed around 150 crore from our 250 crore corpus Fund 1. And yeah, ever so going, and we are staying in touch to our thesis, which is sector agnostic and leveraging the network and the ecosystem. So thanks.
Anjuji.
Good afternoon, everybody. I'm with Ivy Cap Ventures. We are India's largest homegrown fund. We have a little over 6,000 crores in assets under management, 70 plus portfolio companies. We invest in seed to Series A, now Series B. We're a sector agnostic fund. So, some of our companies, Purple, Bluestone, Miko, Snitch. Seed, we've been doing deep tech investments, so semiconductors, health tech, defense tech, AI applications and manufacturing. Seed, we've been coming in, anywhere from 4 to 10 CR, Series B, 50 CR plus. We essentially invest in people, the founders that we believe can actually create and scale and grow a business, businesses that will create an impact. We also very uniquely have set up an endowment fund, a foundation for ourselves, where basically this foundation goes across all the academic institutes in India, and the focus is to leverage this for IP commercialization in deep tech.
Thank you, ma'am. Anil.
Thanks, Deepak. and compliments to entire team be part of this August gathering since inception. We run a deep tech focused fund currently in our fourth fund. We are Bombay based. It's a 1,000 crore fund in partnership with IIT Madras. We have investment in almost all segment of deep tech, be it space, semiconductor, quantum, biotech, security, and maybe we'll explore nuclear if we come across something. But as of now, between all our three funds, we manage a portfolio of around 61, 62 companies. Thank you.
So the next question is, I'm sure most of you come across pitches on a daily basis. Every second guy throws heavy words like AI, ML, I'm using machine learning, I'm using blockchain. How important is technology as an enabler or as the core part when you are looking at a typical pitch? Because many of you primarily do, for example, I already know Anirudh Bhai, Anil, Manoj, you are heavily invested into deep tech, you are invested into semiconductor, you are also looking at quantum as a technology. So how important is technology as a means or as an enabler, or you look at totally tech-based companies? For example, in your case, you looked at Agnikul, we both looked at it. So if you can give us some flavor.
So, you want me to start?
Yes.
So I've always believed that technology can only be an enabler to a business. A business's first role is to solve a real human problem. And therefore, when we look at technology, we first want to understand what is the problem being solved. Because there is no problem being solved, the technology should not exist, right? And you can make amazing technology looking for a problem to solve. So from our perspective, always, and it always is, it's the frameworks in our website as well, which is solve a real human problem, which can be enabled by using technology. Because dhanda sirf technology se nahi banega. Dhanda to tab banega jab you actually have the ability to solve a problem. Person wants to pay a price for that, which is less than the price it costs to solve the problem. So if you can't do that math, then the technology should not exist. But is it important? Definitely it's important. I think the better part, what you're seeing now in India, which is that we moved from copying the West, which was the 2012 to 15 era, to coming up with India solutions, and now to say that we can actually build something like an Agnikul in India. We can build, we've done Rana Semiconductor, Manoj and I together, and we've done Take Me to Space, all three of us together. All of this is telling us that India is now coming up with unique solutions for the world and coming up with its own methodology of how to solve them, right? And I think that's where India is headed, but all of them address a real human problem at the end of the day.
Anjuji, we'll go next with you.
I definitely echo what Anirudh has been saying. And it is about solving a problem, but also understanding who you're solving it for and why they're going to pay you for it, right? And just using AI as an example, when startups come to us, AI has to be very core. It's not just leveraging AI. AI has to be core to your solution, right? It has to add value. And you have to be able to continue building up on it. So I think, yes, technology is core, but it has to solve a real problem for a real customer at a price they're willing to pay.
Thank you, ma'am.
And it also has to be differentiated, right? Especially if you're talking about deep tech. One of the things we look at is there some IP behind it? What sets you apart?
Thank you, ma'am. Anil?
Question is very loaded, man. I don't think I'm qualified enough to
digest
do
part
justice.
of the food.
But see, AI specifically, is much beyond what we talk about. I put it in three buckets: largely AI infrastructure, which includes data center and all those stuff, which itself is a huge investment. We have one investment and we are actually seeing the way it is growing. The second is, AI application, and then we have wrappers. We have investment in, most of them, but the problem is, it's very difficult. It's easy to start. In even data center is not difficult. Only thing, the waiting time is so large that you may become irrelevant by the time you are able to fulfill your infrastructure. I think important here is execution. while technology play, its own sweet role, but as Anju rightly pointed out, I think I learned one thing, every problem has solution. It's not that it can all be solved, but thing is somebody is willing to pay for it, and is he willing to pay again, and then it can go masses. If that's the case, then I think it makes interesting proposition. Otherwise, I may look at doing and don't want to be a business of philanthropy, because in beginning, Deepak rightly said that, like, as we invest in, there are people who invest in us, and we also have responsibility to them. So we need to make money out of our investment. And there's one thing I learned: there are solution for everything, but I think looking for customer who pay for it, not once but again and again.
Agastya.
Yeah, so although it was alluded to, mostly like thought with whatever was said there, and I just add like the technology part, of course the buzzwords came in when that AI boom happened, and about time like we are using those terms sparingly right now, because we are not only looking at the technology, because it's not about the commoditizing that we get from the models, but it is also about the compound, right? That comes from the, let's say, proprietary advantage or the domain knowledge of the founder, right? So to capitalize the founder market fit, right? As well as like some kind of long-term defensibility, because you need to retain as duty and it said, you need to retain your customers. That's the first filter point as well for me. Like, why will the customer continue to pay after the first month? So founder needs to answer on that as well, apart from technology.
Thank you, Agastya. Manoj bhai.
कुछ बचा है?
There's always something for you to say.
So we saw the software era, right? Software as a technology. Then software became an enabler. Then internet era, where internet was largely an enabler. We saw fintech, consumer internet, which is largely enabled by internet. And then we saw AI, the foundational models and stuff like that. But today AI is more like an horizontal layer. It's an enabler. So if you really have to prove something and do something impactful, you have to have a solid moat, which could be, proprietary data, or, solving some solid problem, like in a particular, what I would call is a vertical AI, vertical solution. So if you are just building a wrapper around the foundational models, that can be, copied very easily. But what we see India's moat is largely AI along with some solid hardware play. Now, which could be semiconductor, which could be quantum, which could be space. Like some of us, Anirudh mentioned about company three of us have invested together into is Take Me to Space. Now, when this guy came to us about two years back, talking about orbital data centers, actually there was nothing much about it. And, it was very difficult to build conviction in that. And then, we did the deal, and then the big boys started talking about it. I mean, this was one area where Elon Musk spoke about this much later. So I think these are the problems, these are the areas we as a country will have to work on. And I think these are actually hard problems which we will have to, build our own proprietary technologies for the country and for the world.
Actually, contrary to recent memory, this was one tweet which made the share values go up, right?
So the next question is a difficult one, but it's very pertinent to the audience here, and it will give you a flavor of them understanding your mindset. So you all have multiple companies in your portfolio, from some of the star performers of you are really proud of, to some which bombed really badly, and you must have thought कि मैं क्या सोच रहा था, मैं क्यों घुसा इसमें. So from that combined experience, if I am to ask you that some of your most successful stars and some of your biggest disasters, when you first heard these guys, the two things which attracted you to them and the two things which you learned from the disasters. with the success stories and with the disasters. We'll start with Manoj bhai.
यार इसमें मुझे क्यों फर्स्ट
आपने पिछली बार बोला मेरे पास कुछ बोलने को नहीं
मैं
है.
कॉपी
I would
कर
have a
सकता
cheat
था
sheet
वो
by the
तो
चलो मैं बोलता हूँ.
So, when you invested in your stars, the qualities which attracted you and which has cemented your thesis, and the duds and the disasters and the learnings that why did I do and I'll never make those mistakes again.
So, this example, I have given many time, and actually I had spoken about this company last time on similar stage. The company called Gen Robotic is one of the star performer of our Fund 1, and heading probably someday they will get listed also. And why I'm, emphasizing on this one example is that for us the thesis has been the backing people, right? Like we say, business has failed, but I think it's not business which fails; it's people who fail it, right? I'll address your second question first, and then we'll highlight more about Gen Robotic. We invested in a company, and all was going well, and we had a term sheet for acquisition, but it was founders who said we don't have a bandwidth to wait for 8 months. Right? We could have, sold that company, could have made money, founders could have made money, but when people walk out, I think that's when businesses fail. I think most of the time, there's nothing wrong, with business. We invested in, very futuristic products, but the GTM goes wrong. I think they are not able to come out with a strategy, and neither they are willing to accept that they are not good at that and bring somebody. I think these are all, which I think each of us have gone through, but businesses largely have failed because of people and not because business was bad. Why I'm highlighting on Gen Robotic? Because one, they were still considered to be one of the non-sexy business. They are building robot which is basically helping unclogging a manhole, and nobody wants to even pass through manhole if it is overflowing. And I met them when they were building their product, and what they had to showcase was only a model made out of plywood and cardboard. Now how would you can imagine that this will really work, go 6-8 feet down, unclog the manhole and then do its job? And we backed them with I think that was our smallest check in all funds. And today this company is heading toward a revenue run rate of 100 crore, profitable, employs more than 400 people. I think I have not come across any company with any of the fund, probably I may be wrong, but this one company has, have spent heavily on R&D. They have 65 people. And this team has, always surprised, quarter after quarter, coming up with, innovative product, which not only complex product, but is solving, humans most complex. Like people can't walk. They came out with a machine which enables the recovery, faster than what normally people can do it. Now, a company which was in robotic cleaning, unclogging manhole, use same technology and leverage building a medical product, which is a genius. Like equivalent of that from Europe would be available for 5 crore, and they have better than that selling at 1.5 crore, right?
So your learnings from the disaster then?
People.
That's one thing.
That's why I told you, right? I gave the businesses don't fail, people fail because they move out. And this team, stuck together and, kept on building something which was people needed.
Thanks,
Thank you.
Anil. We'll come to Anirudh. We'll keep you last.
No, I'll stay.
ready.
I know why Anil started, because he wanted to speak about Gen Robotics before I could. That he does all the time. So anyway, I'll give it to him. So I'll skip Gen Robotics. We invested also into Gen Robotics.
So you people run different funds, or is it a family fund?
No, I looked at Gen Robotics first, but he invested before me. So, okay. So, my thought in this is businesses, like Anil said, it is not sometimes what businesses actually fail. And when we invest, neither the founder knows whether he'll be successful, neither what we know. So what for me is a failure is when we are cheated, right? If a founder does something which is unethical, that is failure. If founder has run the company right way, recently we exited a company at a value which was much lower than what we invested. But what we were happy about is that the founder and the product found a good home. And the journey continues. Maybe the value is lower. We invested in a trading analytics company which had 50,000 users when they were not charging anything. Trading is big in India. What we realized, when they started charging, it came down to like 1,000 people. So what we realized is traders in India largely lose money, so they don't want to pay for, though it may be useful to them. So we realized it's a good solution for a broker to offer it to the trading community, and a large broker bought that company and we recovered 60-70% of our investment. We still feel it was a good investment. It was a learning, right? The market size, whether actually people will pay for the product, all that is important, but sometimes you really don't know. When such tests are done, sometimes they are successful and sometimes they take time. So you can't, people say fail fast, right? But it's not always correct. Another example of a company me and Anil invested together. I'll not tell you the name, the founder was here yesterday. So we invested and they took the money and they were not able to use the money. And they're not even using the money, and we're like following up, bhai kya ho raha hai? Paisa bhi use nahi kar rahe ho, kuch kaam bhi nahi ho raha hai. But we got on calls with them, pandemic came, and today they are quite successful, very successful. For us, they'll be like a multiple times fund returner. So sometimes they take time. So I think
Thank you, Manoj bhai. Ma'am.
I may be repeating some, but ultimately you're investing in people, investing in the founders. In addition to execution, I think what makes the founder successful or company successful is their understanding of their customer and their market, right? So that is a very key element of success. On the flip side, companies that have not worked, it has again come down to the founders. For example, the two founders did not kind of work well together. And that didn't come out when we first did it. And that was a core problem. They just did not work and the business kind of fell flat. So I think both on the positive and negative side, it could come. And I think another example is good founder, good solution, just not the right time, right? It's right selling the right solution to the right people at the right time. It was just too early. 5 years later, another business, same thing, completely successful.
Thank you, ma'am. So Anirudh bhai will come to you last. Agastya, quickly, 30 seconds.
30 seconds. So, learnings. We all know what happened with Usman, right? So Usman was one of our leading portfolio companies, and it's an exceptional range under the founders. And yeah, some lack in discipline, some shy discipline happened down the line. Some underlying must happen. And we were also very shocked, so it was unprecedented and we couldn't foresee it. But the learning was that the discipline should be there even if you are at the forefront of your industry or whatever. And the other side would be Zip Electric, so they are about on the verge of getting listed. And with him going back to 2017 when he was not into this electric scooters or quick commerce spectrum, he was making bicycles. And he had to do e-field once, and then he pivoted, and then he understood that this wave of quick commerce that is coming in, and he became a trailblazer in that. So just to identify those, tailwinds that is coming up, we need to do the identification, get the right set of backing. So that's my learning.
Thank you. Anirudh bhai.
I think for me, and without getting into any company-specific examples, I think the ability for the founder to self-assess. How willing are they to have very strong feedback loops? How willing are they to see the trial balance every week, report KPIs, be open with their stakeholders, not just their investors, their employees, or where the KPIs are. The founder not willing to look at numbers, in my history of investing, has never been successful. Right? You need to know every single day, and I think in Marwadis and Gujaratis we have this every Friday, check the trial balance. पैसे आए हैं कि गए हैं इस हफ्ते? How much money do you have? नहीं, रोज trial balance नहीं, रोज bank balance देखना है sir. Trial balance तो नहीं देखेंगे. See your bank balance every day, but look at your trial balance once a week. Why do we do that? It's because it's to understand in this week how far have I gone, considering all the effort that I've done, and what went wrong, so I know next week what do I have to do better. And that's how incrementally now, if the feedback loop, and I've seen this with some companies, feedback loop is I check my numbers once a quarter. In a startup world, things have changed. A quarter is like a year, right? And a year is like a decade. So I think what's really, really important is that, and what I always ask founders, I ask them, last month revenue kitna kiya? Kitna bank balance hai kal? And if they don't know these answers, they know they're not checking numbers. And that to me is a red flag. And if they know that, that to me is a green flag. So same thing.
Thank you, Anirudh. So with permission of all of you, rather than me asking you all a question, we'll take 3 or 4 questions from the audience. My humble request, please stand up, introduce yourself, ask a very pointed one-line question, and please address who you want to ask the question to. So, anyone, any questions? Wow, no questions. So I'll ask the last question again to you. So before we leave the stage, one learning which you want to throw out to all these startups, all the people who are thinking of starting up, what is your word of wisdom in 30 seconds? Because otherwise Sambit will get up and show us the door. So quickly, we'll start with Agastya. What's your guru mantra to them before leaving the stage? क्या करना चाहिए आपसे पैसे लेने के लिए या धंधा आगे बढ़ाने के लिए या सक्सेस के लिए, whatever your guru mantra in 30 seconds.
Okay, Guru. So for person, it was mentioned before as well, the problem should be meaningful. The outcomes that you all reap for, right, that should be, either improving or there should be signs of it getting improved, because customers will be looking at that. So customer orientation is 100%, of course, the discipline part. You believe on your idea, of course, then you need to defend it, even if there are hardships or some turning of heels within your team or from your backers, right? So that should be there throughout, and that'll be there.
Thank you.
Thank you.
Ma'am.
Very simple. If you're going to an investor, be very clear about what the problem is you're solving, who you're solving it for, and why they will pay you for it. And be clear why you need the money now. Do you really need to give away part of your business and take money from me? And why should I invest in you? Why are you coming to me? What is the value that I as an investor can give you beyond money?
Manoj bhai, quickly.
So if you're building tech product, focus on defensibility early. You should be able to, showcase that. And other point is, be very clear with compliance, regulations, and financial discipline. Day one, even if you have not raised money.
Thank you. Anil? No, we'll go to him last. He'll have the final word.
This is wrong, yaar. Pehla bhi unka, last bhi unka. You're biased. Sahi baat hai. Anyway, I think I'll say 2 things which Anirudh has already covered, but I'll emphasize on that. I think one is, stay focused. Many times people distract and they change their path and, are not focused, is the, path to disaster or failure. And second, I fully agree with, Anirudh that discipline is very important. Not keeping eye on, state of the things, maybe numbers or maybe timelines, or maybe, if we call them and then ask for something, like, why the hell he called us? Paisa diya beto paisa banaunga, but issue is not. I have not invested in a, a stable growing company. I have invested in a startup which has no revenue. So need to have certain discipline so that they can go build something and then, see the scale. So focus and discipline.
Thank you. Anirudh bhai.
Now Sanil has put me in this way. I have to do something really big to end this. But that getting said,
so that you come across
I'll take 40 seconds out of 30. Yeah? But what I'll say, and this is a live example. I had to go upstairs to take a call. A founder calls me. Somebody we invested in about 6 months ago. 0 revenues to about 45 lakhs a month in revenue last month. And good founder, great founder. He's already getting inbound term sheets. People are messaging me with the term sheet ki isse mere ko baat karo, we want to invest. What that tells you is that, and that's I think if you want to call it a guru mantra, or at least my mantra for any founder, whether you're funded or not, chase the customer, chase revenues. If you chase the customers, the VCs will chase you, right? But if you start chasing the VCs, and we always say this, right? If you start asking for funding, people give you advice, right? So be careful. If you come with revenues, you come with numbers, you come with LOIs, you come with MOUs, you come with this kind of stuff, the VC will chase you. So focus on the revenues, focus on the bottom line, everything else will be taken care of.
I'll just add on to Anirudh, and it's very important, chase the numbers. And I think we as an investor feel good when somebody calls us and say, why don't you make an intro to this company? We heard that it's doing good. A specific example, a company in our portfolio, I'll not name, but did a business of around 27 crore last financial year. And this quarter they did 28 crore. And the performance speaks louder, and then people say, we would like to invest. Get us some room, get us some room. I think that's what, matters a lot. And I fully agree. That's why, he gave you last. But I took the charm by stealing the...
You took the last.
No, I thought,
Forward the term sheet.
So with that, we come to the end of this session. As you've seen the famous movie Guru, हमने 5 मिनट 45 सेकंड बचा है, वो है profit. Thank you so much. It was lovely interacting with all of you. Thank you.
I would now request Mr. Daftari to present small token of appreciation to the speakers. Yeah. To Mr. Manoj Agarwal. To Mr. Joshi. To Mr. Damani. To Mr. Kumar. Would request for a group photograph, please.